Hey students, so for this I'm going to take you through the homework that's in MBC. Now remember, your homework in MBC, you're going to get two different grades for it. I'm going to do the normal grading for the homework, so anything over 75 counts as a 100 for your Chapter 19 homework grade. However, you're going to get a second grade on this, and this will be the actual numerical score. That will be your pension project grade. So if you earn an 80, you're not going to get a 100 on the pension project. You'll get an 80. If you get an 80, you will still get a 100 on the homework portion. So remember, same amount of work, two different grades. So you want to give this your best shot. So I want to show you how to go through, and I'm going to use number 5 as an example. And I think you might have some different numbers. If you have the same numbers, that's okay too. So we've got some information up here. We've got the PBO balance. Notice they say before PSC adjustment. That's the prior service cost. That means they've had a change in plan. This is going to be important because it's going to impact our interest cost, and we're going to need to do a journal entry for it and amortize it. We've got our plan assets, and they've given us some more information. Service costs, looks like no benefits were paid. The actual and expected return on plan assets, these are the same number, which is abnormal, but they're making it a little easy for us. And then we funded $35,000 into the plan. So let's start by just calculating our interest costs. Now, remember, it's normally the PBO balance times the discount rate. So normally you would think, well, it's $63,000 times 8%. However, we've got to adjust for those prior service cost amendments because that's very impactful. So our real balance will be $70,000. So I'm going to do $70,000 times 8%. When I do that, I get $5,600. Now, pension expense, I'm going to leave this blank for now, and you'll notice I do have the entries filled in here, but if you go straight to the entries, you're going to struggle. What I suggest is going to your pension worksheet next. So on your pension worksheet, this is where you can piece together your journal entry. So let's just start with the balances. So they told us that our beginning balance before we made a change to the plan has plan assets, $73,500. Our PBO, oops, let me take that zero out. Remember, they like credits to be negative in here, so the PBO starts out with $63,000. This is really dumb that they make us do this math, but remember the net pension asset or liability. We have more assets than liabilities here, so the net is $10,500. And then we don't have any other starting balances. So first let's start with that prior service cost adjustment. Remember, this is where we've made a change to our documents. It's retroactive, so we've got to catch up the liability. So I'm catching up the liability by increasing it. And when I do that, remember, FASB says, hey, you know what? You don't have to put that all into pension expense right now. You can put it over here into OCI, right? So accumulated OCI on the balance sheet is going to have that total balance, so prior service cost, of a debit of $7,000. And then in other comprehensive income, because that's been our net change so far this year, we're going to show a debit of $7,000. Because remember, other comprehensive income, we show it additionally things that have changed this year on the income statement and the balances on the balance sheet. Since our beginning balance is 0 and accumulated OCI, those numbers will be identical in this example. Our service cost was given to us. Remember, this is people have worked this year. We owe them more money. So we're going to do a credit to service cost for to the liability of $45,500. It was given to us up here. And when I do that, that's going to be a direct hit over here to pension expense. It's probably the most straightforward one we've got. The next is our interest cost. Well, we calculated that on the previous screen, and we said, we know we need to grow this liability to reflect time value of money, and at our discount rate of 8%, that's $5,600. And again, that's a straight increase to interest, to pension expense. We get to decrease pension expense by the amount we think those plan assets will earn. And they told us that we had an actual and expected return of $3,500. So plan assets go up $3,500 and we get to decrease our pension expense. Now, if we'd had a difference between actual and expected, we'd have one more entry to do here. So you'll have some examples where you've got to do that, right? And you're going to, when you have that difference, you have to come in and adjust OCI, but we don't have that here. We do need to amortize those prior service costs. Okay, well, they were $7,000. And if I go back and click on my initial screen, it's going to tell me that I should amortize that under letter B. Assume that prior service costs will be amortized over 10 years. So if I do the $7,000 divided by 10, that means I'm going to have more pension expense of $700, and I'm going to decrease this $700, right? Which actually in turn changes the balance as well. And then lastly, I'll contribute more assets in. Told me I was going to contribute $35,000, and then that's a cash outflow. It doesn't impact expense. Remember, when I fund it, it does not impact my expense. So let me do one thing before I do my check button, and that is to calculate the net. Why MBC doesn't just calculate this for you is beyond me, but you know, all technology is not perfect. We can only keep asking for them to do things like this. All right, so we know each of these entries, I'm putting in the net impact of the entries. I'm not going to bother doing my totals for here, but obviously you'll have to. Better save my answers first, because I've noticed sometimes they go away if I don't. All right, now let me check. All right, go back to the pension worksheet. Boom. Got all my green check marks except for the subtotals, which I can just put those in as well, but I'm not going to take the time to do that in this video. Now, how does this help you with your entry? All right, well, if I totaled this, I would have a total of $48,300, right? I pieced together all the pieces of my entry. Boom. I know right away then, if I go over to my pension amount, I've got pension expense of $48,300. If I go back to the worksheet, what are all the offsets that build to that $48,300? Well, let's ignore the ones that impact the PBO for right now, because there'll be more than one. I can see $45,500 impacts PBO. I can see $5,600 impacts PBO. Okay, this $3,500 impacts the plan assets. So I better debit plan assets. Let's go back to my entry. Yep, debit to plan assets. Let me go back to the pension worksheet. And again, I'm just looking at the column for pension expense. So I know the first two impact PBO, the next one's plan assets. The next one, if I look across the lines, it's OCI, right? Because I'm bringing that OCI down. If I go back to the journal entry, yep, here we go. I'm amortizing that OCI. And then to balance my entry, I can see it's $51,100 credit to the PBO. I can go back to my pension worksheet and look at each of these pension expense entries and say, do the ones that match up with changes in that liability, do they total that 5,100? I think it was 5,100, 100, and they do. So remember, when I'm piecing together my pension expense entry, I only care about the things that impacted pension expense and what else they impacted. Some of the other pieces, such as this prior service cost amendment and the contribution, those are separate entries. And we can see them. The first one was the prior service cost, and the last one is the fund to plan assets. One last thing I'm going to note on here is that notice it says pension entries with a charge in funding. I think they mean change in funding. It's the same entry, you just change the amount of cash. I don't even know why they had you do that. That's silly. So what else is in here in this chapter 19? For number 1, you're going to try to understand how changes in the PBO are put together. For number 2, you're going to go in and you're going to look at each of the items and tell me whether it impact plan assets, liability, the pension expense, and it could be more than one. Third one, again, this is where you're going to practice your corridor. So calculating that corridor, and you can refer back to the video. And then the rest of the exercises you'll go through are going to be very similar, if not identical, to the ones that I just walked you through. If you have questions, email me. I'll be happy to answer them.